State-run lender Power Finance Corporation has announced its annual results for the fiscal year 2019. The company has posted a net profit growth of 58% from the previous year at around 6,953 crores. We have Chairman and Managing Director Mr. Rajeev Sharma here with us. Sir, thank you for speaking to Bloomberg Quint. Just to sort of start off talking about where do you see growth coming in, where are the sort of loan disbursements going, which areas of the power sector do you see sort of profitability and sort of incremental credit keep going over the next year?
Thank you very much. Our results are excellent. There has been a growth of 13% in our loan asset book and 58% growth in our annual profit and 166% growth in our quarterly profit. We have been able to reduce our cost of fund in Q4 by 30 basis points, and our growth has come mainly from transmission and distribution system funding, which has increased from 24% to 28%. We are exploring new areas of business also, like waste to energy, sewage water treatment plant. We have funded one project in Nagpur. The water will be used, treated water will be used for thermal power project. And I see that we will be able to maintain this growth during coming years also.
So in terms of the power sector, there's last year we saw a lot of companies go approach the Supreme Court and approach the National Company Law Appellate Tribunal against the Feb 12 circular. What is going to happen to those stressed assets, to those resolution? What is the resolution plan there? Because at the time the sector had said that they would look to resolve some of the stress and their non-performing loans with the banks themselves. So what is the strategy now in terms of that?
12th February 2018 circular has been scrapped by Honorable Supreme Court. I understand after that the RBI is working on a new circular. All the lenders are waiting for that circular and guideline for resolution of stressed asset. But we are working continuously and quite sincerely along with other lenders to resolve these stressed assets, and we have been able to resolve one Ratle hydro project which was in JNK and being developed by GVK.
Yeah.
So we have been able to resolve this project. We are getting paid regularly for last 1 year on this account, and this quarter we have reversed 650 crores provisioning made in this project. Similarly, we are also working on SIGA energy, dense energy and SR transmission, in which we are likely to recover almost 100% of our principal. Similarly, we are working on other stressed also outside NCLT. Once RBI issues the circular, in accordance with that circular, along with other lenders, we will take an appropriate decision for resolution of these stressed assets.
So in your Q3 investor presentation, you had said about 16 projects that worth about 23,600 crores were going to NCLT. 10 were still not admitted, 2 were liquidated. So how many projects do you have under the NCLT currently that's ongoing procedures?
Already 15 projects are under NCLT at various stages, and remaining 14 we are trying to resolve outside NCLT. Once new circular is received, in accordance with that, we will take a call how to resolve these stressed assets.
So what is the provision coverage on those assets?
Already 51%.
Okay.
Provisioning has been made. In some project it is 100%, in some project it is 70%, in some project it is 20%. So on an average, 51% provisioning has already been made. I understand this is quite adequate, looking at the resolution of the assets, in which in some cases we are getting almost 50% recovery.
So could you talk about the 3 cases where you've had to withdraw your applications with the NCLT because of the slapping of February?
Actually, 3 such cases were there. KSK Energy Mahanadi and India Bulls, Ratan Amravati, Ratan India and Nasik, which we have withdrawn. Now we will be settling them outside NCLT. We are making sincere efforts. Amravati is in advanced stage of settlement. The developer has submitted a resolution plan to restructure the project and one-time settlement.
Right.
Similarly, for Nasik also, PPA has been approved by the Maharashtra regulator, and the developer is in the process of signing this PPA. Similarly, for KSK Energy also, we will initiate the process with the developer for resolution.
So in terms of GMR Chhattisgarh, this is one of the first projects to be resolved under the interbank sort of agreements and the interbank platform called Sashakt. When do you see that money coming in now that Adani's bid has been approved for that?
I'm happy to inform you that all the 70 lenders have approved this proposal of settlement, and within a month I expect that we should be able to recover our 50% exposure in this project.
So most of your stage 3, stage 1 and 2 sort of stressed accounts were in the government sector, about 2.46 lakh crore as of 31st December 2018. What is the state of those government sort of exposures? Are they to mainly DISCOMs, state electricity boards?
Just to give you an overall view, our loan book is 3,15,000 crores, out of which 83% is government utilities. Yeah. In government utilities, we don't have any NPA. Okay. Remaining is 17% private sector. Right. Out of this 17%, 8% private sector is perfect, where I am getting regularly paid. There is no NPA. So remaining 9% is NPA, and we have already made a provision of 51% in these stressed assets. As I told you, as a strategy and as a sincere effort being made by PFC along with other lenders to resolve these projects, and they are at different stages of resolution, I would say. In some cases, if it is required to approach NCLT, after the new circular is issued by RBI, we will go to NCLT. If it is good for the lenders to resolve it outside NCLT, we will make sincere efforts to resolve it outside NCLT.
So just to ask, what is the state of the power sector today? We know that there was a coal supply linkage problem. There was a sort of PPA agreements had to be changed due to various orders because of international coal prices had risen. So therefore, the domestic prices for electricity had to change. So this led to a lot of stress and sort of differences between what different states were paying. Some states were in debt, some states were in surplus. So what is the state of the power sector specifically for state electricity boards, sir?
I will answer it little positively. Sure. We have to see the efforts being made by Government of India to remove this stress in the power sector. First of all, Shakti scheme, to provide coal to those projects which were not having FSAs. So few projects already got coal under this scheme. Right. Similarly, a new medium-term PPA, pilot scheme of 2500 megawatt, for which PFC Consulting Limited was the nodal agency, under which 1900 megawatt stressed projects got PPA at 3 rupees 34 paisa per unit. Okay. And many of our stressed projects also got, like RKM, got 550 megawatt PPA with Telangana. Similarly, this Hindustan Power got 100 megawatt with Haryana. Then Jhabua Power, some other stressed projects also. In the series, another pilot scheme for which again PFC Consulting was the nodal agency for 2500 megawatt. The price discovered this time for 3-year medium-term PPA is 4 rupees 41 paisa. NHPC is the aggregator for this, along with PFC Consulting Limited. NHPC is making sincere efforts to sign PPAs with the states for this power also. Thirdly, Ministry of Power has identified 14 million additional coal being allocated for stressed projects for which 3 years PPAs will be bid by PFC Consulting Limited again. And the projects which are not having FSAs and PPAs, both, they will get FSA and PPA under this scheme. So government is making sincere efforts to remove stress in the sector. Similarly, another area of concern was the financial health of state power utilities, for which Government of India brought Oher scheme, under which I am happy to share with you that Oher states have been able to reduce aggregate technical and commercial losses to 19%. Right. And gap between ACS and ARR has also come down to 25 paise per unit.
So last question is regarding the merger with REC. The combined loan asset book would be just below about 6 lakh crores, while the net worth would be 60,000 crores. How do you see the merger between the two operationally? What are the synergies that you find between
There is total synergy in the merger, and as you know, the new government is taking over. This was the decision of the same government to consolidate and to get bigger companies which can compete in the international market. And REC and PFC have been working in the same space. So it's prudent to merge both the companies. That's why the decision of consolidation taken by the government. And I am happy today the concerns raised by the market and the investors that after acquisition of REC, PFC will be having an impact on its capital adequacy, will be having an impact on its profitability and margins. You see our results, excellent results today. Our capital adequacy is more than 17%, and Tier 1 is more than 11.67%. So we are quite comfortable in terms of capital adequacy for our future business growth. So now government has asked us to appoint a consultant to examine the pros and cons of merger. That process is on, and once we get the report, we will submit it to the Ministry of Power. An appropriate decision at appropriate time will be taken by the government.